We saw a relatively, I believe, and I'm going to leave this to our expert, Clark Hodges, who's going to join us, unprecedented year in 2021 with the stock market, which now seems to be in correction territory. So if you're among those people who are investing your own money in stocks via Robinhood or other apps, or you simply have access to your investments and take an interest in it, or you open up your retirement statement monthly to see how it's doing, this may not be the best week for you, or certainly last week wasn't. So Clark Hodges is joining us from Hodges Capital Management. And I reached out to you, Clark, because I said, is this time to take a State of the Union? Is this time to really dig in here and let people know, A, what's happening, and B, that question that you're always plagued with, should I panic yet?
Well, a lot of people are going to panic no matter what I say, for sure. So it is definitely, your timing was impeccable once again, because it's definitely a changed market starting in 2022. It reminds me a lot of 2016. If you go back and do a little history lesson, 2016, that year started with probably 6 weeks like this, where it was just yucky, and it just pulled back. And, you know, the other day when I got your text, the market was off a little bit, but today, you know, it's continuing substantially. I think the last I looked, it was down 1.5%. So
yeah, it's down quite a bit. In fact, it's the 7th consecutive day that the Dow Jones Industrial Average is down, and we know that a lot of retirement funds are predominantly invested in the Dow. That's an indicator for a lot of folks. They see that number and it correlates into their own retirement. So what is this in reaction to? I mean, we often say for every action, there's an equal and opposite reaction. Is this just simply, and you've said this before, a correction that was expected? And I know you say that a correction's expected, but even you, with all of your analysis, you can't time when that's going to happen, how long it's going to last, or when that day will come when there'll be a bounce back, and if you're not in the market, you'll miss it.
right. You know, one of the things that does happen sometimes, I've noticed over my career, is you'll be in a market and it will seem fine, and just the calendar changing to a new year, all of a sudden you've got a totally different market. And that's definitely happened right now. I think the wall of worry, you hear a lot about a wall of worry on Wall Street. And to me, the main thing that is now people are starting to say this is definitely going to happen in 2022 is interest rates are going to go up. And we don't try to predict at Hodges, we don't try to predict interest rates. That's fool's gold, right? But you're hearing now that they're probably going to go up 4 times this year. So that is definitely affecting growth stocks. I would tell you that this does happen. This kind of pullback happens, and it'll be fine for sure. But you are having a repricing of stocks, and the growth stocks are the ones that get hit the worst because, Ron, as you know from just talking to us, last year and the year before, all these stocks that you hear so much about, you mentioned Peloton, all these kinds of stocks, they don't trade at multiples of earnings. They trade at multiples of sales, which is ridiculous if you stop and think about it. The valuation metrics over the last few years have gone from, I'm going to buy a stock that's trading at 10 times earnings to now buying a stock that's trading at 10 times sales. That totally inflates the price. And so those kinds of stocks right now are really taking it on the chin. And so from my standpoint, you got to look at value, but you also have to realize that some of these growth stocks are all of a sudden going to turn into value. So it's a really interesting time to kind of take a look and say, what I want to own? What didn't I own? You know, I didn't buy Peloton at 400 or whatever it went to. I know it didn't get that high. But now in the 20s, it might be something to look at for people. So that's what you need to be doing.
Well, Upstart was one that, you know, I was in it somewhere in the 70s or the 80s, and it went to 400. Now it's back to like 90. But when we have these conversations about stocks, we don't want to alienate those among us. And I see them online saying, this means nothing to me. I don't have stocks. And what I like about you is your ability to say to those who are out there who are not necessarily invested, to their knowledge in the stock market, and I say to their knowledge because they don't have hands-on experience every day in trading, but they may have a 401k, they may have a mutual fund, and that's comprised of stocks. But in just a general sense, when this is in the air and people are talking about the stock market is down, the general feeling for people who aren't in the stock market is this is a bad sign for the economy overall. Is that true, A? And B, how does the stock market and its activity affect the average Joe who may not necessarily be invested in it?
Well, it does not mean the economy's bad at all. I'm going to touch my button here. Sorry.
Okay.
It does not mean the economy's bad at all. Just your example is the pandemic. I mean, how bad was the market during the pandemic? But the economy was really just shifting to a different kind of economy. And that's going to continue. But people who have a job and have a 401k, they're definitely affected by this. And you made a mention earlier, it's probably good advice not to open up that statement if you're a worrier. But at the same time, you own mutual funds or ETFs in that 401k, and there you go. You own a bunch of stocks. You own a big basket of stocks. And so it's definitely something you need to be aware of because it definitely is having an effect on your 401k. But like I said earlier, this does happen. It's part of the market, and it will be fine eventually. But I have seen where this might go on for a few weeks, and it doesn't. I'm in no hurry to step in personally and buy anything because I just don't feel like you need to try to catch a falling knife.
Yeah.
Let it settle out. And then make a list of stocks that you want to own or funds for that.
And as it starts to tick back up and there starts to be some indication that that's a pattern, then you jump in. So we have to go, Clark, but just one final positive note here, and let's leave viewers with this, and I believe this is the sentiment. This is not a crash. This does not indicate that we're headed for a recession. This is this is a correction, and it will correct, and it will find a bottom, correct?
It will correct, it'll find a bottom, and it will create opportunities in maybe some different types of stocks. And there's your next wave up, a different type of stock, whether it's a value stock that's been clobbered or whether it's a growth stock. A growth stock that's been clobbered or a value stock.
Another way of saying don't panic. All right, Clark Hodges, good to see you as always. We appreciate it. You can check out Clark at hodgescapital.com. When you're on there, check out his podcast as well. It's called Horse Sense, that's CENTS, Street Smart Investing, which is based on his dad's book, which was called Horse Sense in the regular sense, and inspired by that. Really good information there on a regular basis. You can check in with Clark. And we'll be